To China now, where the property sector has been facing a series of shocks since 2021 after a regulatory crackdown on high debt levels among developers triggered a liquidity crisis. But nearly 3 years on, the mess is still far from over. In January, a Hong Kong court ordered the liquidation of China Evergrande Group, further denting confidence in the already fragile property market. The court cited the property developer's failure to present a concrete restructuring plan more than 2 years after defaulting on its offshore debt. Evergrande has been the poster child of China's real estate crisis, with more than $300 billion of liabilities. Meanwhile, the company is also accused of exaggerating its revenue by nearly $80 billion and committing securities fraud over 2 years before its spectacular collapse. In February, China's real estate market set another unwelcome record, with second-hand home prices in the country's most developed cities falling 6.3% year on year. That's marked the steepest decline since records began in 2011. The downturn was part of a broader trend of falling prices nationwide, indicating that China's real estate downturn remains unabated. In March, the value of new home sales from the 100 biggest real estate companies fell about 46% from a year earlier to $49.6 billion. This follows a 60% decline in the previous month. And last week, major developer Shimao Group faced a winding up petition as state-owned China Construction Bank took legal action in Hong Kong over its failure to repay $201 million in loans. Now, it's rare for a Chinese bank to take such action, highlighting just how bad things are. Similar cases against other property firms have been launched by overseas-based creditors. Okay, let's get more on this, and we're joined by Liang Ding. He's a macro-hive economist and strategist. Over the past months, we've seen many Chinese developers face these liquidation suits. Why is that?
I think in general, we can say the sentiment has improved a little bit in China, but the housing market is clearly still the weakest link in the Chinese economy. In the first 3 months, we saw a 50% drop of new home sales compared to last year. I think the reason for the very disappointing development in the housing market maybe two reasons. The first is given the housing price still declining and the central bank signaling more rate cuts to come, the potential home buyers are happy to wait for better financial conditions. And I think the second reason is the potential home buyers are very reluctant to buy new homes from the developers, given still very difficult financial situation from the developers. The government is implementing the so-called whitelist policy to complete the building projects on a case-by-case basis, but clearly there's no intention to bail out the highly leveraged and financially distressed developers. So I think it's not a big surprise to expect more developers to be liquidated. I think already we have saw already 20 petitions against the developers, and 5 developers have already been ordered to wind up. Yesterday, the state-owned construction bank has also filed a liquidation petition against the Shimao. I think for me, it is a very clear sign that the liquidation of highly leveraged and financially distressed developers is now a part of the solution to end the housing market crisis starting 3 years ago.
Okay, so part of the solution rather than part of the problem. It's been 2 years then since Evergrande defaulted on its offshore debts. What's changed since then, and how far from over is this crisis?
Yes, I think there are lot of things have changed. I think the biggest maybe the change is actually in the mindset of the government and the people, that China has to transform from an investment-driven economy to a more consumption-driven economy. China has announced the so-called large-scale updating program for the production equipment and the consumption goods, but clearly China has to do more. To answer your question, when the crisis will be over, it's of course very, very difficult. I do expect, given the very high inventory, I do expect we need maybe at least 2 or 3 years to see a positive growth contribution from the housing sector. But the positive news is that importance of the housing investment in the GDP has declined from 15% 3 years ago to only 9% now.
Okay, so we're in it for the long haul. Liang Ding, thank you so much for joining us.